look at this current behavior. Could that be an indication of how close we really are to a major crisis, especially when all you're hearing out there is, oh yeah, soft landing, well, maybe we're going to avoid a recession, this is not a problem, the economy's great. Really? Because that's just a big fat lie. But the stock market is going up, expanding those multiples, baby, expanding those multiples, speculating. Who needs downside protection? Everything, happy days are here again. Everything's hunky-dory. Oh my God. If the CBDCs, or once the CBDCs go in place, then as the central banks say, there are no limits to how low they can push interest rates, because there's virtually no purchasing power left officially. You look on the Fed, so they're going to have to attack principal once they went into negative rates. So I think we're probably going to have a hyperinflationary event and then a hyperdeflationary event. But quite honestly, I view them pretty much as the same. Either way, you're going to want to try and protect your purchasing power. And you know, a lot of people, and especially during the Depression, if you could not pay your property taxes, you lost your property. So there's so much that will come onto the market from that, and other not having the ability to pay your mortgage and things like that. If you have gold that holds your purchasing power, and I'm not even talking about it going up in nominal terms, because when they do that is when they do the overnight reset. I'm not saying that the black market, it won't pull away, because it will, or it most likely will. But at the same time, you're going to see the central bank, the Fed, and the other bullion banks suppress the visible price, because they don't want people going to that. So whether it's hyperinflation or hyperdeflation, what people are going to attempt to do is maintain their purchasing power. So, and to your point, so they will convert it into anything that they think will hold their purchasing power better than the currency. The thing that does it the best is the primary currency metal. First of all, I want to say we all vote with our wallets and our purses. So if you stay in fiat so that everything you have is converted to CBDCs or whatever fiat iteration they're going to come out with next, that's not going to solve the problem. It's just really a way of making this huge correction, right? So when all exits, this is why I only buy collectibles, because it's in a completely different category to gold. And because they've suppressed the visible price, the spot price, you know, people don't really see what's happening in the physical market. The physical market is going up, especially the ultra rarities, to brand new highs. I mean, in a substantial way. So it's quite clear that the 1% is going into collectibles, not bullion. So if you want to protect yourself, I can't guarantee that this wouldn't be banned, but it is not likely to be banned, because the people that know about this category are buying collectibles so that they can hold it and use it, even if bullion gold is confiscated or there becomes a problem with buying bullion gold or liquidating it. Well, there wouldn't be a problem liquidating it, because their job is going to be to gather it. So they're going to want you to liquidate what you have. But history has shown they want you to sell it, because once you do, then they have the opportunity to gather it. So I'm not really worried about selling it. We would then, if you sold it through us, we would, whatever the currency is, that's how we're going to pay you out. If those are CBDCs, they don't really want to, they really do want to ban cash, but they really won't just come out and ban cash, because if they did, you would know that things have changed. They don't want you to realize things have changed. They want you to volunteer by staying in the system. That's why they didn't do a bail-in back in March and April when the banks were going down, because they didn't want people to realize that that could actually happen, right? So it's the same thing with the cash, and what they've talked about is simply putting a chip into the cash so that it would mirror or mimic rather the loss of or the lowering of interest rates in the accounts that you can't get rid of. They're likely to do that slowly so you don't realize it. And we're witnessing it now, that noose, your ability to do different things have really gotten quite narrow, especially since 2008. That's when I noticed that things really started to be getting more and more and more narrow. So I don't think they're going to just go boom. shut down, because then you might go, no, you're doing something different. That's not okay with me. They want you to volunteer. They want you to, like the frog in the pot of water, they want you to just stay put. So things are likely to look the same. That's the way they do it. That's the way they get you tied into the FedNow. I had to dig and dig to find out where that connection was. I had a sense that it was there because of the timing of it and everything, but they don't make any of it obvious, because then you would go, no, it's not okay with me. But this way they get you to volunteer. They're not going to ban cash right away. They're going to get you to volunteer it. Anybody that's tried to do this research, it is virtually opaque. There's a reason why it's opaque. They don't want us to know what's going on with it. There are so many things that are happening right now that the ramifications of what's happening, we aren't going to know just yet. It's the same thing with what happened with the Bank of Japan Friday, right? Where they expanded their band, what they would allow the interest rates to rise to. Why did they do that? Because they were losing control of that market, and they don't want anybody to realize that they're losing control. So it was a surprise, but then what did they do on Monday? The opposite. They announced a bond buying program. What happened here in the U.S.? Fitch downgraded the U.S. debt because only those entities that can be absolutely guaranteed that they're going to pay their bills get a AAA rating, right? And like S&P in 2011 said, well, clearly there is now the threat that the U.S. will not pay their debts because we're using it as a tool to get what we want. I mean, I'm talking about the politicians. So what happened was right after Fitch downgraded it, the Treasury announced issuing even more debt than had been previously planned, $103 billion for this particular quarter, this go-round. And then what did they do this morning? But they said that they are considering a special bond buyback program. So they're issuing all of this debt, and they're also now talking about buying back the debt. Doesn't that seem a little schizophrenic to you? And isn't that I think it's an indication that the central banks are panicking and they're just throwing out anything. They don't know what to do. They're losing control. They don't want you to realize things have changed. They want you to volunteer by staying in the system. That's why they didn't do a bail-in back in March and April when the banks were going down, because they didn't want people to realize that could actually happen, right?